Hey there folks, Greg Shepard here. In today's video, I'm going to address the issue that a lot of you out there are misinterpreting, getting misinformation. I'm not sure what's going on. I'm going to clarify, clear up this issue of a 10-year TPA. Okay, TIAA Traditional, 10-year TPA. Typically, we're rolling those monies over to an IRA. You can take it as cash as well for income. But a lot of you are under the assumption or not understanding what happens to those monies that are left in the TIAA Traditional. Okay, over the 9-year period. So I'm going to address that. Hang tight. Again, my name is Greg Shepard. I'm going golfing today. This is why I'm dressed like this. But I told you in the past, when I run across these situations or scenarios, and it's still fresh in my head, I want to disseminate that information via these videos to you good folks out there. And that's what happened. Okay, I've had a few of these emails come in. Okay, so again, before I hit the golf course today and embarrass myself, I wanted to record this video, so hopefully this helps a couple of you, 2, 10, 15 people out there going through the same scenario, because this is very common. Okay, let's kick it off here. I'm going to look at my screen and give you a real life scenario. This is a client of mine. This is apropos for a lot of you out there. You're going through the same situation. You know, you're looking to do a 10-year TPA. Typically, you're rolling those monies to an IRA, okay, non-taxable event. So you're going to find yourself in the same boat here. So let me give you this scenario. And again, this will apply to you out there looking for that 10-year TPA. We're going to clear up some things. Okay, so he's got $250,000 in an RA contract. He has other contracts. This is $250,000, okay? And it's an RA. We're going to initiate that 10-year TPA, paid out over 9 years. It's going to get him probably around $30,000, $31,000, $32,000 per year, because remember, it's 9 years, not 10, okay? We're going to direct that to an IRA. His average crediting rate is 4.6%. His guaranteed rate, 3%, 3%. Additional amount, 1.6%, 1.6%. So a lot of you out there are under the assumption with this scenario, once you turn on that 10-year TPA, the monies left in TIAA Traditional are going to go down to 2.5% in perpetuity. That's not the case. Okay, again, you might be misinterpreting because it does get very confusing. So in this case, what's going to happen is this individual, and you all out there as well, you're going to get that average crediting rate, which in this case is 4.6%. Now, with a caveat, every March, as you probably are aware, or if you're not, I'm getting ready to shed some light. Every March, TIAA, the Board of Trustees meet, and they decide, we're sticking with this situation, is that 3% guarantee for that 10-year TPA and the 1.6% additional rate is that we use the word solvent going forward. If they think economic conditions warrant that they need to lower that, they can to 2.5% on the guaranteed rate. Okay, that's where I think a lot of you folks out there are getting a little confused. And the additional rate as well, they have the ability to lower that as well. Okay, so that, and I'm going to, I'll tell you this: it's pretty rare that happens. If like a COVID type scenario occurs, that's indicative of an economic scenario where they may be, I wouldn't say forced, but they may, kind of, we'll use the word forced to lower that given economic conditions. Very rare this occurs, okay? So in this case, again, we're looking at 4.6% on the TIAA Traditional monies left in that account. And with the $30,000, $31,000, $32,000-ish being distributed on an annual basis for 9 years, okay? I want to make sure I clear that up, because it probably isn't as bad of a situation as 10-year TPA as you may think it is, all right? If you want to go over your situation, by all means, contact me. Contact information should be somewhere below. I'd be more than happy to help you out, give you my 2 cents. I'm going to respond to some emails this morning regarding this issue, and I'm going to go embarrass myself on the golf course, but you can't get outside too much in late February, so I got to take advantage of the days that we have here in the Midwest in the winter. All right, folks, you all take care. Greg Shepard here, SNA Financial Services. Have a good one.